Here's the real question, folks. Is your money safe in banks in 2024? Something to think about. Continue to watch the video. How does a bank fail? A bank failure happens when a bank can't fulfill its obligations to depositors. For example, if a large number of customers believe that their bank is going to run out of cash, they could decide to withdraw their cash at the same time. This is what's called a bank run or run on the bank. Bank runs can be dangerous, self-fulfilling prophecies because these withdrawals happen so quickly that they deplete a bank's cash reserves, while at the same time, the bank's remaining assets might be non-liquid and not immediately available to convert into cash according to NerdWallet. So remember, if there's a run, sometimes you get a lot of media hype. There's a lot of things that happen that creates these things. Always remember, stay within that FDIC guideline. As I mentioned, what happens when a bank fails? Federal Deposit Insurance Corporation, aka FDIC. On the occasion when a bank fails, the bank is closed by the state or federal regulatory agency. That agency attempts to sell the failed bank to a healthy bank so customers can carry on their accounts as usual. If that option doesn't work out, the FDIC will pay customers a check for their deposits only up to $250,000 per account type within a few days after the bank is closed. Is my money safe in the bank right now? Well, let me tell you this. There is no calamity bell warning that's ever going to tell you next Tuesday there's a run on the bank. However, banks that are insured by the FDIC often say member FDIC on their websites. If you bank with a different kind of institution, such as neobank or a financial technology company that's not an FDIC member itself, you could check to see if its partners with an FDIC insured bank are. If it does, it means your accounts are covered by federal insurance through the federal institution's partners bank. These institutions often note funds insured by FDIC instead of member FDIC. Consider the following. Here's 3 quick points. What if I have more than $250,000? How much will my money grow in a bank? Not much. Is my money really safe if inflation outpaces my interest? No. Alternatives to typical banking. Here are 8 low-risk options that generate a return on your money and, to varying degrees, give you the flexibility to access that cash when you need it. Number 1, CD, which is a certificate of deposit, high-yield savings account, high-yield checkings account, money market funds, money market accounts, treasury bonds and notes, T-bills, and I-bonds. These are alternatives that you should always think about so you can position your money properly. Our favorite banking alternative. A whole life insurance policy can be treated like a personal bank if structured the right way. Your cash value savings provides guaranteed growth, tax deferred, so you don't owe taxes with your savings. And if you borrow your whole life insurance cash value through a loan, 48 hours later, if you do it the right way, you can take the money out without owing taxes and reinvest it into other assets. Financial ninja strategy, Swiss Army knife mindset on how to multiply your money. If you want to open up a life insurance policy today, go ahead and click the link below. One of the team members here at Epic will really take you through what that looks like to not only get the policy started, how to get it started, what it looks like on how to fund it, but more importantly, how to leverage it and put it into other investment opportunities so you can get multiple use of each and every dollar. Thank you for being part of the family. Continue to share, like, and subscribe. I look forward to seeing you in the future.